Now let's look at another example of how to time your way into great stocks. In this example, what we are going to see is that here's a stock that jumped from $10 to all the way to around $32 without taking any break. Now you don't want to buy the stock around here because you don't know whether the stock was going to go down or whether you are going to be the last person buying the stock before it dropped. So it's usually risky, and the stock market, success in the stock market is really you trying to reduce your odds for failure and always putting your money where the chances of success are high, where the odds of success are high. LNG was the best performing stock in 2004. It was also one of Mother.com's top percentage gainers in 2004, because if I remember right, we got our subscribers in when the stock broke out past this level right here. That's what we got in. At any rate, the point here that I'm trying to make is that after the stock has this big jump here, you don't want to chase it. So as a technical analyst, what you do is you wait for the stock to make a new weekly closing high and to settle down for at least 2 weeks, at least minimum 2 weeks. It can be more. The stock can break out on week 4, week 5, it doesn't matter, but it should always be on more than week 4 of a breakout. So again, the stock makes a new high here, it takes a small break on week 2, another break on week 3, a break on week 4, and on week 5 it breaks out to new highs. You make a nice probably $7 or $5 per share on just for that simple trick, just waiting for the stock to break out to new highs. You take your profits and you move your money to the next breakout, and that's how we do it. Last but not least, let's go to the last example. Again, in this example, we are looking at IVAN as our giving us our model chart, and this was the best performing stock in 2003. Again, Moathe.com subscribers were lucky enough to be alerted of the breakout when the stock broke out around here. Right now, let's look at what the stock did. The stock in June 2003 jumped from 50 cents, went all the way to $1 within 2 weeks. There was no point for you to chase it there. As a prudent investor, all you needed to do was wait for the stock to settle down, and it did. It settled down, and on the 10th week after making this high, the stock jumped to new highs. Always, whenever they do that, always watch for volume, and you see that volume spike right there. That is indication that institutions buying the stock hands over fist, even as the stock makes new high. And why would anybody want to buy a stock and buy a chunk of it when the stock is making new highs? Because they could already smell that these levels right here, and that's why they were not afraid to buy the stock even in this price range. So at any rate, so you want to do is so if you miss this breakout, there's no point for you to to buy a stock here. It's like trying to get on a train when it has already left the station. Wait for try and get yourself in the next train station. So when the stock takes a break here, just wait for it. So the stock did break a 1-2 pause, and then again on the 4th week right here, the stock takes off to new highs, and that's where you want to buy it. And again, I might also want to highlight this 4th week breakout right there. You see, the stock makes a closing high there, it takes a break on week 2, another break on week 3, and then again it breaks out to new highs right there, new highs right there on week 4. And again, I'm going to track this down. I haven't even looked at this, but I know volume is always high during quality breakouts. So you buy the stock here at $4, it jumps to $7.50. You do the math, within 3 weeks, that's a good chunk of gain. You've not chased anything. The beauty of this is that you start making money from day one. breakouts are the way to go if you're a swing trader. Now again, that was a nice method. I've just shown you how not to chase them. All you have to do is wait for stocks to break out to new highs. Once again, folks, thanks for stopping by. This is Eric Muathe with Muathe.com, as always, wishing you all the best. Thank you.